Why are some undervalued stocks catching the attention of investors lately, despite being down by a whopping 40 to 50% from their peak prices? It's an intriguing question worth exploring, and today we'll delve into a few such stocks that have piqued my interest. These companies may have seen their stock prices decline, but underneath, their businesses are thriving and growing steadily. Let's kick things off with Ulta Beauty, ticker symbol, ULTA. Ulta Beauty operates a chain of beauty stores, and when you look at its stock price, it's evident that it has declined by about 30% from its peak. However, this doesn't tell the whole story. In fact, Ulta Beauty's business has been doing quite well. In the latest quarter, the company managed to increase its revenue by 9%, which, though it might not sound earth-shattering, is quite impressive for a physical retail business like Ulta Beauty. But why is the stock down by so much? To answer that question, let's take a closer look at Ulta Beauty's unique characteristics. One significant advantage is the array of services they offer. While most beauty retailers sell products like cosmetics and hair care, Ulta Beauty goes a step further by providing various services, creating more customer engagement and fostering loyalty. Their loyalty program is another key factor in their success. Over 90% of their revenue comes from loyal members, which is even higher than the loyalty levels at Starbucks. This level of customer retention is impressive and sets them apart in the retail industry. Lastly, Ulta Beauty's capital allocation strategy is on point. While they focused on expanding their store count when they were smaller, they have now shifted their focus towards share repurchases, which can benefit shareholders. When you factor in their valuation, with a P/E ratio of 15, it becomes even more intriguing. So, why is the stock down 30%? The simple answer lies in declining margins. Ulta Beauty's margins have been consistently decreasing, mainly due to two factors. First, they faced challenges in increasing prices last year, and this year, with lower demand, they can't hike prices as before. Secondly, like many other retailers, Ulta Beauty grapples with theft, which affects their profitability. It's worth noting that I used to own Ulta Beauty in my portfolio, but I sold it due to the concerns around theft. In fact, I sold all my retail-related stocks for the same reason. However, I still have one retailer in my portfolio that I feel confident about. It's not based in the US, so I don't have to worry about theft concerns, and it doesn't deal with cosmetics, it focuses on selling groceries and essential items. This retailer has been growing at an impressive rate of 35 to 40%, and they recently reported a 35% revenue growth. If you want to learn more about this retailer and my entire portfolio, you can check out the link in the description. Now, let's move on to the second stock on our list, HDFC Bank, ticker symbol, HDB. HDFC Bank is India's largest private bank, but its stock has seen a decline of around 30% from its peak. However, when you look at the bank's revenue and revenue growth rate, it's evident that the business is thriving. You might wonder why the stock is down if the bank is doing well. The answer is quite straightforward. While HDFC Bank is growing at a healthy rate of 20%, the banking sector in India is on fire right now, with other private and public banks growing at rates of 30% to 40%. During robust times in a sector, investors often prefer more aggressive options, and that's why HDFC Bank may be underperforming. For example, if you look at ICICI Bank, ticker symbol, IBN, and IDFC First Bank, you'll see that they have outperformed HDFC Bank by a considerable margin. This trend happens because investors tend to gravitate towards aggressive options in a thriving sector. However, when the sector faces challenges, HDFC Bank, known for its gold standard lending standards, will be the first choice for investors. I currently own ICICI Bank, IBN, and IDFC First Bank, and my Patreon members are already aware of these holdings. The reason is simple. These banks are more aligned with the investor sentiment seeking aggressive growth in the banking sector right now. But it's crucial to remember that market dynamics can change, and HDFC Bank's solid reputation will become more appealing when the sector faces headwinds. This brings us to the next stock in our discussion, ASML, ticker symbol, ASML. I want to be transparent and mention that I currently hold a position in ASML in my portfolio. As of now, my position is valued at €16,000. While I'm up by only 3% on this investment, the stock has seen a significant decline of 25% from its peak. The big question is, why is the stock down? ASML is an equipment manufacturer specializing in making machines for semiconductor companies like Intel, Samsung, and TSMC, Taiwan Semiconductor Manufacturing Company. The semiconductor industry is known for its cyclical nature, with years of strong growth followed by weaker ones. This year, ASML is poised to grow by 30%, but the following year is expected to be weaker, which is likely the reason behind the stock's decline. So, why do I still hold ASML in my portfolio? The answer is straightforward. While the next year may be weak, 2025 is projected to be a year of strong growth for ASML. The semiconductor industry's cyclical nature means that ASML will have its ups and downs, but it remains a solid long-term investment. If you're curious about the rest of my portfolio and my favorite stock, which makes up nearly 25% of my holdings, you can find more information by clicking the link provided. So, let's take a moment here and ask everyday Americans to leave a comment. I'd love to hear your thoughts on these undervalued stocks and the factors driving their performance. Share your insights or any stocks you're interested in. Now, let's wrap things up with a disclaimer. The information provided here is for educational and informational purposes only. Investing in stocks involves risks, and it's essential to do your own research and consult with a financial advisor before making any investment decisions. Thank you for listening, and stay informed as you explore the world of investing.